Very challenging day today. FOMC market was all over the place. Really wild, whipping market. 200K portfolio hypotheticals minus 41.75. Actuals did better. The micros really diverged today and did much worse. We'll go over those trading system signals. Did about $1,000 worse than the hypotheticals. So very disappointed in that and very challenging day. Let's look at the portfolio calculator. If you add 4,100 to this number, you get 14,677. We are in a drawdown alert, about $9,000 away from our worst case drawdown. So drawdown alert as well. And the question you have to ask, should we trade on FOMC? So this is the portfolio calculator update through yesterday. Don't trade on FOMC. If we put this at 1, that means we don't trade on FOMC. Look at the results. This goes for total profit over drawdown is 51.62. If you put this in here, let's see, it goes down to 44.10. The drawdown goes up. So if we don't, historically, if we don't trade on FOMC, we do worse. And so the reason we trade on FOMC is because we tend to remember days like this and think, wow, FOMC days are tough. And we tend to have a biased memory that forgets the days when the FOMC days did really well. And so let's look at the difference on the year. Let's see if it's improved the year or not. And so if we look at this year, 332,000 on the current portfolio. Would that be better or worse this year? And I haven't tested this in advance of this video, so it will be news to me. On this year, we typically look at the longer term results. And so this year, the results would be better if we did not trade on FOMC. So in general, the last 3 years, it would have done better to not trade on FOMC. This is the results not trading or trading on FOMC, and the results not trading on FOMC are better the last 3 years. Longer term, they're worse. I don't like to bias it, but with the extra volatility, it's something to consider moving forward that we don't trade on FOMC, even though the long term says that we should. Those biases sometimes mean revert, and so that's the only thing I'm cautious of. And so we may not trade on FOMC going forward. I'll have to look at it more, do a deeper dive into that because, 2020 marks kind of a regime change in index levels and volatility since the pandemic. Let's look at the market and the trades on the day. The advanced decline line went wild. Anytime you see it going from minus 1,500 area to plus 1,000 area and then back to minus 1,700 area, that's a huge swing. The market also, we were short, had some nice short trades going up about 3,000 on the day, and then the market reversed, and then we had a trade at the end of the day that brought us back a little bit. So minus 3,000 on the E-minis, but just a wild market. They continue to fight the short side. The market's default nature wants to always resolve higher, it seems, on Fed, and so just to stop running every day, and the market finally rolled over. And I honestly don't believe we've really begun the real bear market. We've been in a repricing in 2022. So here's a longer-term daily chart of the NASDAQ, and you see that traditional short trading models have not worked that well this year, and especially since June low. And so the market, while the market is down, it meets the requirement of a bear market by being down 20% or more. It hasn't acted like a day trade model. It's kind of in a repricing period. We've talked about this before. It's gradually, the concept of gradually and then suddenly. And so we had this multi-year bull market. The bulls do not want to give up. They have all the liquidity left over from QE to buy the dip and try to prop it up. And the Fed came out today, FOMC, and said fighting inflation was more important than keeping the market higher, and the market sold off on that. The market has felt like the Fed has been at its back for so long, it's hard to adjust that psychology that the Fed is no longer at your back. They keep thinking that the Fed's going to finally come around and bless our stocks. And, it's more important to fight inflation is what the Fed said. And so let's look at the trades on the day. I mean, I have personally anticipated that the market would move higher because there's so much liquidity that would go ahead and buy it anyway. And so, I think that after what the Fed said today, it could go either way still at the seasonal strength at this time of the year. It's interesting, but we still haven't been in a bear market, and I'm open for a move in either direction. The liquidity just wants to buy it here out of habit, but the fundamentals have it much lower. So it'll be interesting to see where this market goes. It should go lower. Will it, though, is a big question. That's why we trade long and short day trade models. Let's look at the trades on the day. So you can see here we had some nice short trades going. Cobra 3, FOMC came out, and then they had the press conference, and there's always this stop running, short covering attempt to cause the shorts to cover or attempt to buy the dip, and the market rolled over on the press conference. Viper caught a small long trade right there. We didn't have a lot of trades today. Viper took the long trade. Cobra 3 took a short trade. Tick Reversal took a short trade, stopped out on this rally, and then Tick Reversal 2023 took a short trade, stopped out on this rally. The market finally rolled over, so it's just always out to run those highs. Markets will do that, but not typically as much as it's done it this year. It's always got this bid in here to run those highs. And let's look at the S&P strategy. 1 for 4 on the NASDAQ and 0 for 2 on the S&P. Cobra 3 stopped out here, and on this setup, tick fader stopped out here. So stopped out on the long, stopped out on the short. What I did on this is I exited when tick fader was stopped out. Cobra 3 got short here, and the profit target was just below this low, and so I exited right before the Cobra 3 right before it hit its profit target, because I was concerned that this would happen, and it did happen. And so we did a little better on this trade for Cobra 3 because we got out down here. We were flat. One system was short, one system was long, and it came close to that profit target, and I went ahead and stepped in front of it manually and overrode the strategy, and that helped us do a little better on some of the trades today. Where the micros did worse, these stopped out. There's so much on these fast moves, the micros do much worse. And so while these trades were stopped out, the slippage was much worse on the micros. Also on Viper, we only had 1 trade on the E-minis, but then we had a bunch of other trades with more slippage and automation errors on the micros. And so disappointing on the micros, disappointing day overall, and tough trading. But we are in a drawdown alert, and so moving into the end of the week as well, we typically tend to do better on Thursdays and Fridays. Recently, I don't like to focus on day of week or day of month or time patterns that much because those tend to mean revert. I will have to look closer at this. Don't trade on FOMC since it has done better the last few years to not trade on FOMC. But as far as a day of week, lately just trading on Fridays would have done better, but I anticipate that will mean revert, and I'm not a huge fan of just biasing your strategies to trade on a particular day of week. As soon as you do that, then all the other days will work, and the day you're trading won't work. And so, but we are moving towards that day of the week that does work better, and we are trading all the days of the week right now. And so Monday through Wednesday so far this week has been down, and we're in a drawdown alert today. This doesn't include today's drawdown. Today's drawdown add another 4,100 to get to 14.6 and about $8,000, $9,000 away from a worst case drawdown. So those are the trades on the day. And final results for FOMC day on November the 2nd, 2000.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.